Hi everyone, welcome to our webinar today. Hi Samuel, hi Brian, hi Josh. Hi Kane. Okay, can I just check if everyone can hear me clearly and if you can see my screen? I should have trading view shared right now. If you guys can't answer me on the chat box, don't worry, you can just answer me on the Q&A box. I think the chat box is disabled for some people. You can just answer me on the Q&A box. Okay, I'm supposed to be doing the introduction now, but my slides are stuck. Like they just suddenly stopped working a minute ago. Let me try to refresh. Okay, this entire screen is stuck. Okay, don't worry. As long as you guys can see my trading view screen, I think that's the most important part. Can you guys let me know in the chat box? Hi, Given. Hi, Mama. Hi, welcome. Okay, cool. I'm assuming you guys can hear me because I saw Given waving or raising his hand. Okay, guys, I'm supposed to do my introductory slides right now, but I have two monitors and one of the monitors is stuck, so I can't share my screen on that. That's okay. I'm just gonna do the introduction without the slides. Okay, so welcome everyone to today's webinar. We're gonna be doing a live analysis session today. So live analysis session means that we will go into TradingView and then we will look at charts together and a little bit of setup and look for some setups. Okay, so disclaimer, please remember guys that this webinar is only for educational purposes only. Okay, this is not like a signals group. It is not a forecasting group. It is purely for education. So if you guys do have any questions regarding trading, don't be shy. You guys can ask in the chat box or in the Q&A box, because I know the chat box is not working for some of you. I think the chat box is disabled for some of you. Right? Okay, I'll go with the disclaimer. I'm just gonna write it down here in case. Educational webinar only. Okay, sorry, this is supposed to be shown in my slides, but my screen literally stopped working 1 minute before I started this webinar. I don't even, yeah. As long as you guys can see the trading view, that's most important. Okay, I'm gonna introduce myself. My name is Sandra, or you guys can call me Cass. I'm an investment analyst and a prop trader here at Everest Watching Group. We're an award-winning research firm. We're the finalists for 2019, 2020, 2021. And well, 2022 is not out yet, but yes, we are the finalists for technical analysis research. So if you do have any questions regarding technical analysis, don't be shy, ask in the chat box. Okay, a little bit about me in terms of trading. My background in trading, I think more importantly is that I have passed my Forex fund a few times. So the whole point of me telling you this is because my Forex fund trader would be required to pass with an 8% profit within the month. So I've done that before. So hopefully whatever I shared you guys today will help you grow your accounts and also hopefully help you pass the test for those who are taking the test. Okay, so let's start with today's webinar. If you guys have any requests for charts or any particular pair you want me to look at, just let me know in the chat box or the Q&A box, and then we can look at those charts together. If not, usually my webinars, I try to do 3 charts. One is a Forex pair, one is a cryptocurrency pair, and one is a commodity. So the commodity that I will choose is usually XAU USD. Okay, so we're gonna start with XAU USD, followed by a Forex pair, and then followed by cryptocurrency. So for cryptocurrency, we're not gonna look at the smaller pairs. We're only gonna look at either Bitcoin or Ethereum. I prefer looking at Ethereum. And if we still have time, we'll look at other Forex pairs. Okay, so let's start with XAU USD, and then we can slowly make our way to this. What is going on? Okay, there you go. Okay, so every time before I start my charts, I will remove all my drawings and indicators so that I can start with a clear mind. And I usually start with a daily chart. Okay, so I will usually start with a daily chart. Why am I starting with a daily chart? It's because I want to find the directional bias on the daily chart. So this directional bias is going to help me decide whether I'm going to go in for a buy or a sell. So let's start with looking for trend. I do see a trend line breakout. This trend line breakout it's been a while. It happened on the 8th of November. It's already the 15th of December. So this breakout was about a month ago. So the thing about breakouts is that usually after a breakout, it doesn't matter if it's a horizontal breakout or a trend line breakout, usually or more often than not, sorry, can I just check if everyone can still hear me and see my screen? Okay, cool. Thank you. Okay, so usually with a breakout, whether it's horizontal or it's a trend line or whatever breakout it is, price tends to come back to the area of the breakout to retest that area. So as you can see, price broke out from this descending trend line, usually, not all the time, but usually, like more often than not, after a breakout, it will come back and retest. And only at that retest, if the retest passes, like if it successfully retests that zone, it will then continue with that area it broke out to. Okay, so in this case, I am, like, just based on that general rule alone, I am a little bit biased that gold is going to come down a little bit more before it continues up with its upwards movement. Okay, so now that we have our general directional bias, we can highlight some levels. These levels are going to help us to find our entry, our stop loss, and our take profit. Okay, let's start with a support. The support, we're always going to be highlighting support resistance, and then we're going to move down to the smaller time frames so that we can narrow down closer entries. Okay, so if you are looking at a daily time frame to look for entry, stop loss, and take profit, you are more of a swing trader because your trades will last for more than a day. It will last for maybe up to a week. Okay, but if you are a day trader or a scalper like myself, the daily time frame is not the best time frame to be looking at, but we will still be looking at a daily time frame because we want to get our directional bias. Okay, so we've already got our support. I'm going to highlight the resistance now. We can see that price nicely bounced off this resistance here, which is, I think this is really important. That's why it's so important to recognize or identify support resistance, because support and resistance is usually the area where price tends to bounce off. Okay, so support resistance is never just a single line. It's never just one single price. It's usually a zone. Okay, it's usually a zone. So in this case, we can see that price gold came to this zone, which is 1821 area, 1810 to 1820 area, and it just reversed off nicely, and I expect it to continue reversing as well. Okay, one more thing I do see is that there is a support here that price recently broke out of. So if gold closes like this today, remember guys, it has to close, okay? It cannot wick, it needs to close. Okay, if gold closes below this support right here, okay, I will be even more biased of the sell, my sell entry. Okay, so ultimately what I want is to see gold close. That means the end of today's trading day, gold close red like this under this support. That's a good sign that it's going to continue moving down. Okay, so let's go down to our 4 hours time frame. Okay, cool. I think if on the 4 hours it closes like that, it should be good enough already. Yeah. If on the 4 hours gold closes on the 4 hours time frame gold closes below this first support, then we should be good for a sell. Okay, so ultimately right now I'm a bit more biased of the sell. Let's get in for a sell entry. Okay, I'm gonna put a closer take profit, which is somewhere around here. Okay, I wanted to put somewhere around here, but it doesn't look like a very good level. I think the best level will be here. Take profit, entry, stop loss. Okay, where are we putting our stop loss? We have two options for our stop loss. The first option is to put it here above this swing high or above this swing high. Okay. Okay, the other option, if we're being a bit safer and it's gonna be like a one-to-one kind of trade, will be here. Okay, I just want to measure the risk to reward, because if the risk to reward is lesser than one-to-one, there's no point taking this trade anyways. Okay, this is not a good trade. It will not be a good trade. So a little bit more risky, but at least the risk to reward will make a bit more sense. Okay, is to put it here. Okay, so we can put our stop loss here at this area, which is right above this swing high here. And we can get in for a sell. So ultimately, what are we looking for now? Now we're gonna wait for a proper break of this structure. It needs to break, okay? It needs to close underneath. It needs to close underneath, come back, retest. Once it has retest, then you can enter for a sell here. And then you can put your stop loss here, you can enter for a sell and hopefully hit your take profit. And you'll be making a 1 to 1.4 kind of trade. Okay, don't be too anxious to this. We still need to back it up with other things. Okay, so after we have found our stop loss, take profit, entry. Okay, our stop loss, take profit, and entry. What are we going to do now? Now we are going to, give me a sec. Let me see if this is a better entry. Yeah, I think this will be a better entry actually. The risk to reward becomes better as well. Okay, now we're gonna back this up with other things such as Fibonacci levels and indicators. Okay, this is not a complete move, so it's very hard to measure where exactly gold is gonna come back to. Okay, let me try to measure in a different way. There are no very clear levels for gold. That's totally fine. Okay, I think gold's gonna break out. like just one look, I think what's gonna happen is gold is gonna break out, kind of stop here, come back and retest, and then here, if the retest is successful, you can enter here for a sell. Okay, what do I mean by a successful retest? A successful retest means that when price gets to this area, you need to wait for a reversal pattern candlestick. If you do not see a reversal pattern candlestick, do not get into this trade because you are just getting in without confirmation. Okay, so wait for price to come back to this area, retest. Price right now needs to close below here. Do whatever it wants to do, come back and retest, and at the retest, you're going to enter for a sell. Okay, I'm going to back this up with other indicators. Yeah, okay. Just give me a sec, guys. Okay, gold isn't saying a lot on stochastics. Right, that's totally fine. Stochastics isn't showing much other than that we need a breakout. Okay, so yes, for sure, what we're looking for is a proper break of this area, retest of this area, and then at the retest, we're going in for a sell. Okay, so my analysis for XAU USD is a sell, but please wait for the break and the retest and the confirmation. So the confirmation you're looking for is a reversal pattern candlesticks. I cannot teach you guys reversal pattern candlesticks today because it is too large of a top. It's too wide of a topic. So just Google reversal pattern candlesticks. Okay, once you see a reversal pattern candlestick, that is your sign to get into this trade for the sell. If you do not see the reversal pattern candlesticks, do not get in for the sell. Okay, everyone good for now? Everyone clear? Let me see. How do you use Fibonacci? Oh, okay. Hey, Given, sorry, I just saw your message. I think with XAU USD, the structure wasn't too nice, so I couldn't really show you how to use Fibonacci. So let me go to another chart. Like I said, we'll be doing one commodity, one Forex, and one cryptocurrency. Let's see how Ethereum is doing, or maybe Forex. Let's see how USD CAD is doing. USD CAD, if you guys have any requests for any Forex pairs, do drop it in the chat box and we can look at it together. Let me see if the structure allows me to get it. Okay, so let me delete everything. Again, every time you do an analysis, start with a clear chart so that you don't get confused from your decision from the last time. Okay, so just remove everything and re-chart unless your charting from the last time was still valid. Okay, so USD CAD, what are you seeing? What are we seeing here? I'm seeing that there is kind of like a slight downtrend here. Okay, do you guys see that? USD CAD is making lower highs, lower lows. Okay, so lower highs, lower lows just means that price is currently on a downtrend. Okay, but if we're looking at the even bigger picture, if we're looking at a very big picture, USD CAD is actually on an uptrend. Okay, do you see that? It's actually on an uptrend because it's making higher highs and higher lows. Okay, but it doesn't matter what it's doing on like the longer picture, like the bigger picture. We're gonna focus on this area here because I think most of us here are either day traders or scalpers. So this big like picture here is not relevant to us for now. Okay, right now it's not that relevant to us unless we are swing trading. Okay, so let's look at USD CAD, a bit more biased on a downtrend because it is moving kind of steadily in this downtrend. Okay, so let's see what the 4 hours is saying. Let's readjust this so that it looks better. Okay, so USD CAD is definitely moving in a very nice kind of like downtrend movement. Okay, so therefore we're a bit more biased to get in for a sell. Now that you have found your directional bias, okay, that's why it's so important to look for trend, okay? Because when you look for trend, then you can already decide whether you want to get in for a buy or sell. So now that you have decided that we are getting in for a sell, our next move is to find where the entry is. So yes, I know we're getting in for a sell, but where do we get in for the sell? And where do we get out from that sell? So this is when you determine your entry, your stop loss, and your take profit after you have decided, am I buying or am I selling? Okay, so for USD CAD, I'm a bit more biased that it's a sell rather than a buy because of that trend line. But I also do see kind of like a slight uptrend going on here. Okay, so this is going to be a very tricky one. When I see situations like this, it just makes me feel like the directional bias for this chart is not very clear. Okay, it's not very clear. In fact, USD CAD is kind of moving in a triangle. A triangle means that it's just kind of hovering between. Let me find my trend line. Okay, so you see that it's moving in a triangle. So what does a triangle mean? A triangle means that price is moving within this triangle. It's going to reach the end of the triangle. And when it reaches the end of the triangle, it will decide whether it wants to break to the upside or the downside. Okay, so for this reason alone, I immediately don't have a directional bias for USD CAD anymore. Instead, what I'm going to do as a trader is to wait. Okay, so I'm going to wait. I'm going to do my analysis. I'm going to highlight some levels, and then I'm going to decide when the breakout happens, if I'm going in for a buy or a sell. Okay, so let's highlight some levels. I do see a resistance here that price is trying to break out, kind of. Okay, I'm going to highlight this resistance because this is a okay, so this is a resistance area. This is the support. And this is another resistance area. Okay, so what are we waiting for now? The first thing we're waiting for ultimately is the break. Let me pull up my pen. Okay, the break of this triangle. Okay, this break of the triangle is the confirmation of the next trend. Okay, that's the first thing we're looking for. Second thing we're looking for, once price breaks this triangle. Okay, once price breaks this triangle, sorry, this is not relevant to us because we are waiting for the break. Once price breaks this triangle, if it breaks out here, we're going to wait for the retest here. And then we're going to get in for a sell. Sell until where? We're going to sell it until here. Okay, we're going to sell it to the next key level. So the next key level usually means the next swing high or the next swing low. Okay. If price breaks out on the upside, we're going to wait for price to break this resistance area here, retest, and then at the retest, we get in for a buy. Okay, so for USD CAD, there's no entry, stop loss, and take profit. Ultimately, what we're doing is just waiting for a breakout. Okay, we don't decide where price is going. We let price decide for itself where it thinks it's going. Okay, so that's USD CAD. Don't worry, we still have time. We can still look at other Forex pairs. In the meantime, we can just look at Ethereum. We're gonna move on to cryptocurrency. So it's either Bitcoin or Ethereum. If you guys want to look at Ethereum, we can look at Ethereum. If not, we can just look at Bitcoin. Given I'm gonna show you in a while how to use Fibonacci, but you need to give me a sec. I need to find a chart with a good structure. Okay, so it looks like Ethereum is kind of moving sideways, right? I think the market structures these days are not the best, not gonna lie. It's just not very clear. A lot of it are moving in triangles. Ethereum is moving in a triangle as well. Yep, Ethereum is moving kind of like in a triangle as well. So we're also waiting for a breakout. I'm a bit more biased that the breakout will be a buy rather than a sell. Okay, so same for Ethereum and USD CAD. We are just waiting for a breakout because price is kind of moving in a downwards and upwards structure at the same time, right? So it's very hard to come up with an analysis when price itself is still deciding where to go. Okay, so let's not look at Ethereum. Do you guys have any other requests for Forex pairs? If not, we can just look at GBP USD. Okay, this is a better structure. I do see a better structure here. Before I move on with the analysis, I'm just going to quickly show, given how we're using Fibonacci to make analysis. So Fibonacci it's a very long topic, but I'm just going to show you Fibonacci retracement. We're going to take the swing high and the swing low of this entire structure here. Okay, we're going to pull out the 5 levels that are usually used in Fibonacci retracement, which is 23.6, 38.2, 50%, 61.8%, and 48.6%. Okay, these are the levels that traders will expect price to reverse from. That means, so can you see that price is kind of doing like a V kind of like structure or movement? Usually when it makes like a V structure of movement, it usually does this. Okay, so it does this, it goes to one of this level and then it reverses. Okay, usually that's how it works. So it can either go to this level and reverse, or this level and reverse, this level and reverse, this level and reverse, or the 78.6 level and reverse. Okay, we don't know exactly which level it's going to reverse to, but by using Fibonacci retracement and by using Fibonacci confluences meaning that you're combining different levels of Fibonacci and seeing which area has the most resistance area, we can kind of like pinpoint where we think price is going to reverse up. So I'm going to give you an example. Right now we've got a Fibonacci retracement here, right? Okay, I'm going to draw a Fibonacci projection. So Fibonacci projection is different from a retracement. A projection is like this. A projection requires you to look for this kind of N pattern. It's kind of like zigzag pattern. Okay, so just now when we were looking at Fibonacci retracement, it was kind of like a V pattern. Okay, now a Fibonacci projection is kind of like a zigzag and an N pattern. Okay, this is what we're looking for. So once you have identified that zigzag and N pattern, what you're going to do is plot it, swing low to the swing high to the swing low, and you're going to pull out your Fibonacci retracement levels, and you're going to see what lines up nicely. Okay, in this case, nothing lines up very nicely. We're not going to use Fibonacci projection. So I won't be able to find you an example right now because that requires time, but sorry, let me get out of this. Okay, but usually when you look at a chart with a lot of Fibonacci projection, you will see a lot of Fibonacci levels lining up in the same area. So I can plot a Fibonacci retracement and there'll be like 50% here. I can plot a Fibonacci projection and then there'll be a 61.8% 8% here. I can put a Fibonacci expansion, which is a different kind of Fibonacci, and there will be 127% here. Okay, so then I will see a lot of levels lining up in the same area. So when I see that, that's usually the area where I think price is going to reverse off. Okay, so that's how you use Fibonacci to kind of pinpoint or like project where you think price is going to go or where price is going to reverse. Okay, so let's do an analysis for USD, GBP USD. What I do see is kind of like a V-shaped movement. Okay, so I do see a V-shaped movement here. That means we will be able to use our Fibonacci retracement, but the first thing we want to do again is look for trend. Okay, so we can see that price was moving in a downtrend for the longest time. It was moving in a downtrend from May of 2021. And finally in December. So GBP USD was actually going like dropping and dropping and dropping since last year, May, until like 8th of November this year. I think that's exactly when gold did the breakout as well. So this is where it looks like GBP USD starting with its recovery. Okay, its recovery means that the trend is no longer a downtrend and it's going to start with an uptrend. Okay, can you see there was kind of like a triangle here as well, and price decided to break to the upside. Okay, so that triangle came out, and that's why it's so important to wait for a triangle breakout rather than to kind of predict or like forecast where you think price is gonna go. Okay, so clearly GBP USD is on an uptrend. We're gonna see if we can find an entry. If we can't find an entry, we're not gonna force it, because if we force the entry, a lot of times we're just going to not make money. Okay, don't force the entry. Okay, so I do see an uptrend, obviously. For now, let me just highlight a few levels. I think you guys should be good for a buy for GBP USD. Just give me a sec. I'm trying to find an analysis, but I think just from a very vague look, it looks like a buy is possible. Okay, I'm going to use Fibonacci retracement to see how valid this buy is. Okay, guys, I think you guys should be okay for, we should be okay for a buy for GBP USD. Take note, guys, this webinar again is for educational purposes, so please don't jump into the trade unless you yourself agree with my analysis, okay? Okay, so this area, I do see a bit of resistance here. Resistance meaning that when price gets here, it's going to have a hard time breaking this area because of like the resistance or like just barriers here. Okay, so therefore, if it won't be able to break, it has no choice but to reverse, right? So when it reverses, that's where we enter for a buy. Okay, that is where we enter for a buy. Okay, so let me just back this up with other things like, okay, we're good for a buy. Ichimoku is agreeing. Let me see if stochastic is agreeing with our analysis. Stochastics don't really agree. In fact, stochastics is showing a divergence. Okay, do you guys see that stochastics is showing a divergence? A divergence means that price on the chart is moving on an uptrend, but on stochastics, it's moving on a downtrend. Okay, so this is stochastics way of telling us, hey, I think the trend is incorrect and I think a downtrend is going to start soon. Okay, so this is the problem that we have right now, is that stochastics is showing a sell, but on the chart it's showing a buy. Okay, it doesn't matter. Our whole job as a trader or as like an analyst is not to like get the perfect trade or get the perfect analysis. Our job is to get an analysis and then decide whether we want to get in on that analysis or not. Okay, yeah, definitely stochastics is showing a bearish divergence. That means stochastics is kind of telling us, hey, there's a possibility that trend might reverse. Okay, let's see what RSI is saying. Similarly to stochastics, there is a bearish divergence. Okay, there is a bearish divergence here. Okay, cool. What are we gonna do now? Okay, so let's say when I did this analysis, my confidence level was like 100%. Okay, I was like, oh, I have a really good feeling. Okay, maybe 90%. I have a really good feeling that GBP USD is going to continue going up. Okay, but right now I see stochastic and RSI telling me that, hey, it's not a buy anymore, it's a sell. My confidence level immediately drops by like 20%. So now I'm only like maybe 65% confident that GBP USD is going to end up in the buy. Okay, so now that I know what I think the probability is for this trade, now I can decide whether I want to get into this trade. Okay, so I would say this is not a high probability trade. I would say it's just a setup with a very low, like 60 to 65% chance of winning. So if you are a trader, like obviously you only want to get into trades that are high probability, right? You can still get into this. Good question. Yes, you can still get into this if you want to get into this, but my advice is not to use your normal lot size. Instead, go in a smaller lot size. So you have two options right now. If I'm a trader and I see this analysis, I have two options. Number one, I don't get into this trade at all. I totally just miss this trade. I just move on. I go look for different charts because there's so many pairs out there. There's so many Forex pairs out there. There's so many cryptocurrencies. There's so many commodities for me to trade. There's so many indices for me to trade. So I don't need to force on a trade if I don't feel confident with the trade. Okay, so that's your first option. Your second option is you can still get into this trade, but go in on a very, very small lot size. Okay, go in a very, very small lot size and use a very, very tight stop loss because this is not a high probability trade. Yes, Ichimoku is agreeing with our analysis, but RSI and stochastics is showing a bearish divergence. Okay, so you have two indicators kind of warning you, hey, this trend may be incorrect. Okay, so if you still want to get in on this trend, you still can. Obviously, you still can, but just use a smaller stop loss, a tighter stop loss, use a smaller lot size so that the risk is minimized. Okay, so I personally think I'm going to skip this trade. I don't usually want to get in on trades that are low probability. I only want to get in on trades that are high probability. So high probability trades to me are like trades that are like 80%. When I do the analysis, I feel like I'm 80% confident or at least 90% confident that it's going to hit my take profit. If I don't have that feeling, if I don't have that kind of confidence in the trade, I will just skip it and not get into the trade. Okay, so this is all like, this has all to do with your trading psychology. Like, don't force a trade, don't chase a trade. Okay, cool. I see we have a request for GBP AUD. Okay, we can do that. Okay, let me see what I see for GBP AUD. Straight off the bat, I do see that it's at a resistance. It's trying to break the resistance. If it successfully breaks this resistance, we are going to get in for a buy. If it does not break this resistance, we're going to get in for a sell. It's that simple. Okay, give me a sec to highlight some levels. Let me look for trend first. I don't see a very clear trend because although price is kind of moving in and upwards, this area has not made higher high yet. Okay, in fact, this looks like it could be doing a double top. Okay, so depending if price respects this area or not, it's going to be a buy or sell. So I would say GBP AUD right now is at a deciding area whether it wants to get in for a buy or sell. Okay, but it does look like it is breaking, right? Do you guys see that last candle that is breaking? Okay, so let's just do an analysis for this particular pair. If price breaks, we're gonna get in for a buy. If it doesn't break, don't get in this. Like you can get in for a sell if you want to. Okay, on the smaller time frame, it is moving in an uptrend. Let me try to do this. Okay, cool. If we're getting in for a buy, where do we take profit? Just give me a sec. Let me try to figure out where to take profit for this. We can use Fibonacci to get our levels because I don't see any horizontal levels there at the side. Okay. Okay, nothing important. I'm trying to see if I can get any like good levels for you guys. Okay, this is what I was talking about earlier on with Fibonacci confluence. Can you see like the 161.8 and the 127.2 is exactly lined up on the exact same level? That just means that this is a very significant level and this is a level that we want to be using in the future, either as our entry, our stop loss, or our take profit. Okay, so in this case, we're going to use this level as our take profit area. Okay, I'm going to put a take profit just slightly below. This will be your take profit. This will be your buy entry. And this will be your stop loss. Okay, this will be the stop loss. Okay, why am I putting the stop loss here? Because I do see a swing high kind of area here, right? Do you see this? There's kind of like a swing high. So if you put it here, it's kind of weird. You need to put it below, slightly below. So it's going to be somewhere around here. Okay, cool. This is the level that we're going to use before we make any decisions. We need to combine this with indicators to confirm. Okay, stochastic is okay with this analysis. RSI is okay with this analysis. Yep, RSI is okay with this analysis. What else? Ichimoku is okay with this analysis. Okay, I made an analysis. Okay, we both, all of us saw how we came up with an analysis. Okay, once we come up with analysis, we combine our analysis with Fibonacci levels. Once we combine with Fibonacci levels, we combine with indicators. I pulled out 3 different indicators, and all 3 indicators agree with our analysis. That means that this is a high probability trade, and the chances of price getting to our take profit is like higher than it is to get to our stop loss. Okay, so I would say this is a high probability trade, but right now, because price is testing the entry area, we need to wait for one more thing before we can get in for this buy. Okay, we need to wait for price to close. It needs to close, okay? It's not wick, not wick. It needs to close. Okay, wicking does not count. This candle here, I'm gonna zoom in. Sorry if it's too tiny. This last candle here, this last one that is ongoing right now, needs to close above this buy entry. If it closes above the buy entry, that is your first signal that, okay, price has broken out and we can get in for a sell. The best thing that you would want to do, okay, the best thing that a patient trader would do is wait for the breakout, wait for the breakout, wait for the retest, and only at the retest enter for the buy. Okay, so you have 2 options. One is to wait for the breakout and enter. I don't recommend that way. It makes you not wait, but it is less confirmation. Okay, the better way is to wait for the breakout, wait for the retest. At the retest, look for a reversal pattern candlestick, and then get in for a buy. Okay, everyone good? Everyone following? Is anyone confused for now? Given, are you still, do you understand a bit more on Fibonacci already? Sorry, I can't really teach you like the full, like in depth for Fibonacci because it's a very wide topic. Like usually it takes me about 4 hours to teach Fibonacci, but today we don't have that kind of time. So I can only give you like a brief overview of what it is. Okay, everyone good? Okay, we still have 10 more minutes. I'm thinking we can look at one more chart. If you guys have any questions, or if you guys have any questions at all, do try in the chat box and then we can do a Q&A session. If not, we can just look at one more chart. Okay, so GBP AUD, I'm a bit biased that it's a buy. It's kind of breaking out already. We're waiting for the confirmation of this close. The close is the first good sign. 3 indicators are agreeing. This is our take profit area. I would say GBP/AUD is a high probability trade. Like I myself would take this trade. Okay, so let's look at something else. Maybe AUD/CAD. I'm choosing like non why I'm choosing AUD, CAD, because I'm trying to choose a non-US pair, okay? Because we already did like USD CAD a while ago and GBP USD. So I'm trying to do like a non-USD pair because usually those USD pairs, they move in one direction. Usually, I mean, not all the times, but I would say like maybe 80% of the time it does move in one direction. That means like if USD CAD is moving up, most likely USD JPY is also moving up because that means the entire USD currency strength is very strong and it's just going against all these other currencies. Okay, so I tried to diversify by not just looking at the USD pairs. So we can look at other things like USD, AUD CAD. Okay, one thing that I see with AUD CAD is a trend line breakout, which is good because remember we were doing GBP AUD. GBP AUD, we're calling for a buy, right? That means we are expecting GBP to go up and AUD to come down. And now that we're looking at AUD CAD, it's showing weakness in AUD, which is in alignment or like in agreement with our analysis that the US dollar is going to weaken. Okay, just give me a sec. Sorry. Okay, cool. This is the 4 hours. Again, we have to start on the daily. As usual, we start on the daily. Even on the daily, there is a slight breakout there. On the 4 hours, there is a slight breakout as well. Let's just highlight some levels. These levels are going to work as our entry, stop loss, and take profit as usual. Okay, we're biased for a sell for AUD CAD. Question is, where do we get it for a sell? I'm gonna put my stop loss here. I'll put my take profit here. Sorry, my entry here, and my take profit here. You guys notice how my stop loss, take profit, and entry is always as horizontal levels, because horizontal levels are your key levels, and this is usually where price gets in, reacts off. Okay, I'm going to change this to a red arrow. Let me just look for some levels. Okay, cool. It's saying that the potential for AUD CAD is much lower. Okay. This is the first level that I'm seeing. Let me see if I can find any other levels. Okay, cool. Okay, I do see two Fibonacci confluence area here. This is Fibonacci confluence. When you pull out different Fibonacci levels and you see them all lining up in the exact same area, that is exactly where we think price is going to reverse off. Okay, so your take profit can either be this level or this level. We're going to put in the first level to be safe. Okay, so take profit. That's going to be a sell. We're waiting for the breakout. The breakout, we're going to confirm this with Fibonacci, indicators, of course. Let me see. Let me see if they agree. Okay, stochastics is in agreement with our analysis because it's saying that there is a breakout, and also it's saying that there is still room for downwards movement. RSI is also showing a breakout, and it's also showing room for downwards movement. So RSI stochastics is agreeing to analysis. Ichimoku price is trying to break the cloud. Okay, so I would say Ichimoku is not confirmed yet, but it's on its way to being like in agreement to analysis. Okay, so there's three analysis, like there's three indicators here, and two of it are agreeing with our analysis, and one of it is on its way to agreement analysis. So what we're gonna do now is wait for the breakout, retest, reversal pattern candlestick, and then at the retest area, you get in for a sell. Okay, I know there's a lot of waiting involved. I don't know if you guys have heard this quote before. Trading is 10% selling, 10% buying, and 80% of the time you're just waiting. Okay, so we're just waiting for entry, basically. We're not gonna rush this. I mean, I know traders will just immediately get in now for the sell. You can, but it's risky, right? So if you want to be a profitable trader, trading is not a sprint, okay? It is a marathon. So you can be like greedy today. You can like not want to wait for your confirmation today, but how long will that last you? Because you need to think about your career as a trader for years, right? So you can be greedy today, but is that habit going to serve you for the years that you're going to be a trader? If it's not going to serve you, don't practice it, because it's going to end up becoming a habit. Okay, so wait for the breakout. The breakout is happening right now. You wait for the retest, and at the retest, you get in for the sell. Only get in for the sell if you see a reversal pattern candlesticks. You don't see a reversal pattern candlesticks, do not get in for the sell. Okay. Okay, cool. That's all I have for you guys today. Thanks for joining our webinar. I will see you guys probably in a few weeks. I'm not taking you guys next week. So thanks, Given. Thanks, Samuel. Thanks, Josh. Thanks, Brian. Thanks, Muhammad. Thanks, Sarah. Thanks, Jess. Thanks, A. Thanks, Tuan. Yes, I didn't ask where you guys are from today. Thank you so much. I will catch you guys again next week. Okay, I don't think I'll be catching you guys again next week. Probably in 2 weeks or a few weeks, but next week I'm sure someone great will be taking you guys. Okay, so good luck everyone in your trading. I hope your trading account grows, and I hope your trading skill improves as well. Again, if you have any questions, don't be shy. Just feel free to drop it in our next webinar or whatever webinar. The whole point of these webinars is to help you guys improve in trading and to be better traders. Okay. Okay. Bye, guys. Thanks. Bye.